All right, guys. We're just waiting on a few people here. Waiting on Giovani. Hold on one second. Let's get our thing going. We have APSK 32 and Plan C. We got 178 people. And we're going to get Giovani and Smithson with and also maybe Sina.
Yeah.
So should be fun. I want to take we've had this huge move in the market. So I think it's kind of a good time to look back and kind of sort of say, where are we, kind of in the power law. We don't need to do it every day, but this kind of a thing, a lot of people are like, how's that power law doing, guys? And I think it's a good time to check in with it. And also, now we have some of these oscillator measures, and I want to take a look at where everybody thinks we are kind of in the relative value, cheap to rich, opportunity to no opportunity. And also everybody's asking me, how far can we go in kind of this cycle? I guess that means until the end of next year, something like that. So we'll take a look at that. We'll just wait a little bit for Giovani to come in. Just ping him on the other thing. 1 second. You coming? Coming. Oh, Sminston's coming. Great. Okay, we have Sminston coming. All right, great. Adding him to the mix as well. All right. Well, Giovani should join us shortly, but let me start with APSK 32. You've done those great animations and stuff. Where do we stand right now? And where were we kind of at the bottom of yesterday's sell-off? And how do you feel about the power law and when you see stuff like that?
I feel great. So I'm a Bitcoiner that still stacks. So I could understand if you came in 2014 and now, every paycheck you get, if you're even still working, maybe it doesn't meaningfully contribute to your stack. I didn't quite get in that early. I still have my job, and I still stack every 2 weeks, a little DCA, right? And so I use the power law support. That's kind of my favorite metric. That's the one I trust the most, right? So that's kind of traces out the bottom of Bitcoin's price. It's the line that Bitcoin touches on every bear market.
And Giovanni, 1 second. So, hey Giovanni.
Hey.
Buongiorno. So we were just having APSK. We just started by talking about where we are in the power law. Today, as far as how far are we from the support? What kind of opportunity are we? But you just started APSK 32, and you were saying you talked about this support line. Can you define more rigorously what you mean by the support line?
Well, so mathematically, the power law is just a function. I don't want to get too deep here, but it's just a function where the exponent is constant. So our time variable is days since Genesis. The exponent is constant. That's what makes it different from an exponential. And you can compute the regression in log, and it's a straight line. That's the thing that makes a power law look straight and log. So if you do that on all the data, you get some line that kind of goes in the middle of the data points. But you could also shift that down either using percentages. I've seen it a few different ways, standard deviations. I use something called quantile regression, but anyway, it just fits a power law to the bottom instead of through the middle, right? And
And
so
that
that's
and that and that line is parallel to the line, the
yeah.
regression line,
I,
correct?
it's not. Well, I mean, it's not exactly, but that's probably
Oh,
in the noise. So
yeah.
um, they're essentially parallel. Um, but we came into this having, and then you can layer on top of the power law. There's this idea of the cyclic nature of Bitcoin, right? It goes through cycles: bull market, bear market, bull market. Some people track it by halving, some people track it by 4 years, but everybody kind of is aware that there's a ramp, there's a peak, and then there's a bear. I'm not married to the idea that this has to continue into the future, but it's gone on for more than 12 years. So I'm not going to give up on it without seeing some evidence. But when we came into this latest halving this summer, right? So after the ETFs had come out, we had come up very high in price. We got up to $75,000 about per Bitcoin. And that actually was well above the support, further above the support than we have been in previous halvings. So you could use that as a measure of, well, maybe Bitcoin was relatively expensive because of the ETFs. Um, and so your DCA, the amount of Bitcoin that you can buy with your paycheck every week, it goes up as the price goes down. So again, as somebody still stacking Bitcoin, seeing the price come back down closer to the support is something that I was quite excited about. This is I have hasn't shaken my faith in any way. In fact, it just seems like a tremendous buying opportunity. I wouldn't complain if it went all the way down to 35,000. I don't think we'll get there, but if it did, it's a great summer Christmas present, I suppose. So yeah, feeling good, and I still have high expectations for 2025.
Great. Well, thank you. I'm going to pass it over to the professore. Uh, Giovanni, were you in any way shaken by the mini crash that we had, or did
Yeah,
you did?
absolutely not. Right. So
Oh,
first of all, I have made several state of a market in the last several weeks and months, and my prediction was, I always say, it seems that the power law is much higher than where we should be. The price is much higher than where we should be. Very similar to what APSK is saying. It's mostly FOMO due to the ETFs. And one of the things that I maybe can contribute is that I want to study it a little bit better. I want to make a real full-fledged model of that. But the question if I want to ask is, say, what kind of flow we will need in the next several years to continue this power law, and how that compares with the flow, for example, like the ETF are bringing in. And with the reason to do that will be to show that the ETF are not these phase change, this incredible disruptive event that people think they are. They're important in the sense that are exactly what is needed for the power law to continue. Is we need that kind of level of contribution. We need institutional contribution at this point, not just retailers, to actually continue on the power law trend. I made some rough calculations that if I can show you how the logic goes, but the bottom line is $850 million a day to continue on the power law trend in average from here to the next 10 years. Now, it's not going to be
all right. What was
exactly
that? 150 million per day.
850.
850.
Yeah,
850. Okay.
850. Also because the ETFs are not traded every day, right? I mean, they're not traded on the weekends, on the holidays. They are traded only. There are 250
That's
trading days
850 per weekday.
per weekday. Yeah,
Per weekday.
850 per weekday. That is unbelievable. Because and that shows the ETFs are not these things that justify all this FOMO. It's great. We had FOMO. It's nice, but I already repeated for a long time. We are very much overvalued relatively to where we are. I have also graphs where you can compare.
Can you quantify that, like in terms of percentages? Like, are we 10%, 20%? Where would you say in terms of percentages?
So one way of doing, and I can show you maybe through a graph because
feel free. Anybody, I would say, feel free to share graphs here.
In fact, I have another interesting graph that you will like, but it's about global liquidity because I did a study on global liquidity. You will find it interesting. But let me see if I can share the screen because we can compare basically through this graph. It's a little slow. Just give me a second. This one.
So
what I'm
just
going to show
simply
you
while he's pulling that up, maybe
Yeah.
about 50%, maybe about 50%, kind of rough number above support right now.
Okay.
50% above support, but that doesn't mean we're 50% overvalued, right? We're not generally at support.
So let's compare where we are relatively to the other cycle, because I think that is the best way to think about it. So if you can show my what I'm sharing, can you show that, please? Because I did go through sharing the screen, but
okay, I'm not seeing it. Giovani, there's nothing that I can share here.
Let me try again.
Okay, wait a second.
Share window. Okay, so but basically, if you want a verbal discussion until we solve this problem of the sharing, because I'm going to show
if you can just if you can text me
like the first cycle. The first cycle, the price was all the way to the support. Let me see. Okay, do you see now? Okay, you should be able to see because I see the chart. I see the chart.
Now I see it. Yeah, now
Okay.
I see it. Okay,
Yeah, great.
Perfect.
So this is the first stuff. So I'm superimposing here. These are some of the indicators that I developed for trading view based on the power law. So the first red line that you see here. So first of all, this is the white line is the power law, the general power law trend. The blue line is what they call the full model that tries to include both the tops, the decay that we observe from the tops, but also the support line. So the support line you can see is the blue line when it's not a top, right? Because this model is trying to do both. It's trying to include the information from the tops and the bottoms. So notice where the red line was relatively to the blue line in the first cycle. In the first cycle, it was almost there. It was touching the support. So at this particular time, because all these, the last data points will be where we were at any point in the previous cycles, right? So it should be clear enough. So at that time, we were basically at the support line because actually it was an amazing cycle where we almost follow like a textbook example, like we follow the bottom almost perfectly all the way to the time when we had the bull market, and then we left the support and we went to the bull market. In the second cycles, we did touch that bottom line, during the bottom, but then we kind of got a little bit excited, like now we went even above the power law. Then there was a correction, and the major correction actually was COVID, because you see that sharp downtrend that was COVID. And in fact, it was almost like a resetting. They say, okay, I should not be here. Let me go back where I'm supposed to go. And in fact, notice what happened. We barely breached that, because these are also rough calculations, you can do it in different ways. But it seemed that we touched that bottom line, and then we bounced back. And right now, I would say that in comparison with the previous cycles, we are a little bit lower, right? We were higher, in fact, very comparable with the previous cycles. But now, because of these recent corrections, we went a little bit below that, right? So visually, if you can calculate it more precisely. You can see visually, we are more or less where the other cycle was, right? So it's not different to anomalous. If anything, the first cycle was anomalous because it was so close to the support line. So we are perfectly where we are supposed to be, right? And the idea, because the cycles, I agree. It's an add-on. It's not really the core of the theory, because the core of theory is this beautiful straight line that we know is not a straight line, but a straight line in the log graph that it seems to continue to work, right? It will be really strange if it doesn't. But the idea of the cycles is a add-on to the theory, because they also seem very regular. The only problem, we had only 3 of them, right? We had only these examples. But the idea is, if this is how I put it all the time. I say, if everything repeats exactly like before, at least statistically, from a statistical point of view, then this is what to expect. So what to expect is that in November of this year, the full bull market starts. So we see here, try to show that in the curving of this blue curve here on the top. So during the November, we should start to leave the support. Theoretically, we're already away, but if everything behave perfectly like the theory, let's say, we should leave the support and go towards the top. And usually that process takes about 1 year. This is how precise everything here. We spend 2 years at the bottom, but it's not really a bear market because we go up anyway following the power law. So we have 2, 4 years candles. We have 2 green candles going up with the power law, and we have a super green candle when we go up that year during the bull market. The top will be in 2025, in the end of the year, maybe November, October, something like that. We should reach about 210,000 if the decay continues to be consistent. And then we go down for another year, because that is also very predictable. Again, based on everything repeating exactly like before. We go down to 1 year. For 1 year, the price should reach about 65,000 by then. And then, the story repeats. So this is how things looks ahead, in my understanding.
Okay, well, thanks a lot, Giovanni. I want to pass it to Sina, because one of the things that you mentioned, and I don't know if Sina was there for it, but you mentioned that your calculations show that we need $800 million a day coming into these ETFs, not ETFs, but just coming into the market through ETFs or other, just to kind of grow the power law. Now, I know, Sina, you have done some work also with how much we need to get in just to sort of stay still, right? Not to collapse. And so I wondered if you could share those kind of numbers with us.
Hey, I don't have it right now, but what I recall is anything below 200 million cumulative across all the ETFs. When you look at the historical data, anything below that in terms of inflows has been, or at least 200 million has been neutral. So a day where you get that level of inflow, typically the price hasn't changed. Anything above that has begun to be positive for price. Anything below that, even though it might have been positive, it's been market negative. So, and that was a very interesting thing. We talked about that on your show a while back. The idea that I think you put it as, we are an addict, right? We need some inflow because there is, there are miners that are selling, and if adoption is happening, the bias of the market should be on the side of purchasing more and more, right? Especially given these ETFs being new instruments, so they should be like a sponge absorbing lots of capital. And on a day that they're not, that means there's been quite a bit of sell pressure, right? So this seems to be consistent with what Giovani is suggesting. And I think that's a pretty interesting thing. A lot of people say, how is it that there's positive flow but price is going down? Well, it's not enough, right? So to support prices, as the asset gets larger and larger, And when the price goes up, that's only the marginal price, right? So the last buyers have been ready to pay that higher price, but it needs some time to kind of stabilize and that price be applicable to a larger portion of the supply, meaning lots of volume, lots of transaction, economic action should happen at that price to make it really stick. Otherwise, we'll get a correction, right? Because only a small portion of people in a short period of time have been willing to pay those high prices, but not everybody. So if that flow is not enough, then you get into a situation when there's, the incoming capital isn't supporting the price.
So Sina, you as a Bitcoin holder, again, same question. Were you worried yesterday? Did you do any buying? Were you just panicking? Did you sleep okay? How did you react?
I was panicking because I was trying to see where can I find more fiat to buy. So essentially, but actually what I did was I was watching the futures market. I was looking for capitulation point of the futures traders, and that happened on Sunday evening and Monday morning. So if you look at the daily aggregate funding rate, you see that it remained positive over the weekend. And I think I had a few posts mentioning that, I mean, it's good that price is dipping, but we need this capitulation to happen to be decisively bouncing back up. Monday morning, I looked up the funding rate. It turned negative. Essentially means a lot of the long leverage long positions in futures got nuked. People gave up, and now too many people are bearish. That was the signal, and that was actually when the price dipped below 50 for a moment. I couldn't catch it at that, but a little bit above 50. I put in all the money that I wanted to invest in two separate purchases, and because I also have some cash right now because I wanted to buy, change my house. So I actually had quite a bit of money on the side, but market gave me a great opportunity and I took it. So I'm really glad. Just, panic is great. You had a post a while back that said buy the drone. Remember there was this Iran-Israel attack where they sent some drones and that kind of crashed the market. Buy the drone, buy the geopolitical.
It's like Saylor says, chaos is good for Bitcoin, ultimately. Right?
Exactly.
So Sina, I know you've been kind of looking at the macro, right? You had a pretty big post about Chinese banks. Obviously, the yen is in the news lately. We know that real estate's kind of elevated and maybe equities in general, if you look at something like the Buffett indicator, right? Or the capitalization of all US equities over GDP. Do you think that this was it, or do you see, or maybe more of a probability thing? What probabilities do you put on this cascading or being the start of a larger correction, or this being the correction?
That's a great point, and that's $1 million, or is it probably $1 billion question? But I have some thoughts. I've been thinking about it for that last couple of days. Listen, the geopolitical thing. I'm Persian, so I know what's going on the Iranian side of the Iran-Israel thing. So they typically talk a lot more than they do, right? So people get a lot more worried about a war. If the war really begins to sting, there is some sense in both sides in terms of, we're not going to destroy our infrastructure. We're just going to make a good gesture and show that we have power and then back off. Because they want their power, they want the empire that they have. So it's a very low probability event. I understand there's a tail risk. So it can actually turn into a horrible situation. But typically the market overreacts to these kind of things. Just a couple of months back, the whole drone thing, right? It was nothing. They send a bunch of drones and toy things, and they all exploded in the air, and nothing really happened, right? But so I think the market is overreacting to that. Then we get to the second problem we have, which is the yen carry trade. That's actually a huge thing. It's about a $20 trillion trade. And, people have been piling on that trade for decades. because the Japanese central bank has been putting their rates at zero, essentially giving a huge discount on Japanese currency, which belongs to the people. But the discount was, given to international institutions and investors who were able to borrow yen at almost 0% in many cases. And then they got the yen and changed it to something else, probably US dollars, invested in everything, including NASDAQ and T-bills and S&P and all of that. And now they have to unwind that trade because the yen has appreciated. Now everyone needs to raise a lot more yen to pay the same amount of loan. And that pushes them to sell more. And that kind of causes a cycle, self-perpetuating cycle, where more people raise yen and sell their assets. And that causes the yen to go further up, and that liquidates more and more people. So that's also the classic, panic thing. You can clearly see that again. Also, the market this turns out to be a huge crash in the short term, but it explodes and then goes away. So I'm not expecting this to last for a long time, but the risks will remain. But the worst part of it probably over for the short term. The part that I'm really worried about is the economy. I mean, a lot of people have been speculating on, a recession is coming since the last couple of days, since the Fed hiked the rates with the highest amount over the last 40 years. We haven't had this rate of increase in rates. So people expected a lot more adverse effects on the economy. They haven't happened, partly because there's probably a lot of liquidity that's getting injected into the market through different ways. There is about $1 trillion of annual interest on the U.S. debt. Somebody's getting it. A lot of the investors around the world hold government bonds, and they collect about $1 trillion interest on that. That is new money that's being injected. And there's also the shenanigans that Janet Yellen played with switching to a lot more towards issuing the bills instead of the bonds, and that has a positive effect on liquidity. At least it shields the market from the negative effects of QT. But whatever the reason, recession hasn't arrived. But now seems like at least we are going in that direction. At least in the last 3 months, we've had 3 consecutive declines in the new job growth. The unemployment ticked up from 4.1 to 4.3. That's a huge jump for 1 month. But 4.3 is, some people I saw on Twitter saying 4.3 is pretty good. It's a great unemployment rate. The problem is when you look at the historical pattern, every recession begins like that. So you get to the low, which was 3.7 for us in 2023. You get a slow increase, and then suddenly you get a couple jumps like we had in July, and then right after that, nonlinearity kicks in, and it goes up super fast.
So you see something like 6% unemployment is possible, maybe even by year end. Do you see something like that? High 5, 6%, something like
sometime
that?
in next year, probably.
Yeah. Next year, okay.
So I see it in 2 ways. Either this was a one-off jump in unemployment. I'll probably give it 30% likelihood, but more 70%, it's the beginning of a downturn. If you want to call it a severe or a light recession, be my guest. But I don't see. I mean, everything else is pointing to a problem. We don't know the extent of it, but we know it's not going to get better in short time. McDonald's was just out a few days ago saying that our customers have struggling to buy our items. The cheapest possible thing out there. People are struggling to buy McDonald's, and they're switching within McDonald's menu. They're switching to lower price items.
So they don't go supersize me; they downsize me. Downsize the regular fries. Exactly. Let's pass it over to Plan C a little bit. We've got, I think, here on this chat, we've got 6 very quantitative people, and so I'm just kind of curious if anybody at any moment of panic at all. Plan C, what do you think?
Yeah, hey guys. Really enjoying the conversation, listening in here. Definitely no panic on my end. I mean, I actually bought during the COVID crash. That's when I went in super heavy. I pretty much liquidated everything I could during COVID. So I've just actually held ever since. I actually haven't traded at all. I held through basically the 2021. We had that kind of lull in the summer when we came down from the first peak, and then we kind of went down to 30K. I held through that, and I held through the FTX and Luna crash down to 16, and just still holding, obviously. So no, this was nothing for me, and a big part of that was because of the power loss. So I just want to say, obviously, a huge thanks to everyone on the call, especially Giovani, for really introducing me to the power law. And it's really only the last few months that I've done a deep dive on this. Consumed a lot of your guys' content. I had an epic 9-hour call with Giovani. He gave me the full download. I mean, it's just awesome to have these tools. And the power law, I just want to speak quickly to the power law. I've looked in on-chain. I spent multiple years looking into all the on-chain metrics. I'm fortunate I have access to all the best data. I have the top subscription for Glassnode. I've looked into different TA models, more on the higher timeframes. And the power law stands out to me head and shoulders above everything I've ever seen. And, people have their kind of opinions. They'll give their opinions on the power law, but ultimately the criticisms are pretty weak. They're, we can't predict the future based on, historical data. It's like,
yeah.
well,
So one of the people in our chats, I noticed you were in there, Plan C. They have this constant criticism. I think Giovanni, you weighed in as well. They're like, you can't predict the future with math. That was the criticism. Right?
Yeah, I mean, it's kind of silly, right? Because Giovanni can speak to the details of that, but I want to just go over a couple of things before that. But yeah, I mean, all is to say there's very weak arguments against it. I'd like to hear some more statistical arguments for it, not just all the governments are going to buy Bitcoin tomorrow and we're going to break it to the upside. I mean, okay, great if that happens. We're all happy, and I would be more than happy to be wrong about the power law, right? So. But I'm going to get into some specifics and just give people an overview on some specific numbers here. So one thing that's really interesting about the power law is the R squared is actually is trending higher. So we're actually seeing it go. Giovanni can speak to this again, the specifics, but we're actually getting to 90. We're actually at 95.5 now. So we're pretty much getting up to 96 R squared, and that continues to trend higher over time. So the actual fit of the power law seems to be trending to be a better fit. So that's significant to me. The actual trend line is currently at $73,500 US. So I mean, just to show you where we're at currently as far as the actual current price versus that's the trend line, right? That's the it's called an OLS fit or regression, OLS regression. And
if you want to share a graph, feel free to do that.
I don't have it. I just wrote down some notes, but I don't actually have the charts in front of me. But another thing to speak to is, with the power law support, because similar to APSK, I actually feel the power law support, I feel the most confident in, just because of the amount of data there and just how well it's held through since the beginning of Bitcoin. So the power law support, which Giovani and APSK kind of brought to my awareness, the power law support is currently at, if you use a fifth quantile regression, so meaning 5% of the data points are below that line, you get 38,000. So that's using the full data set, and that's using a fifth quantile regression or fifth percentile. And so 5% of the data points are below the line, and that's at 38,000. If you use the third quantile, you get 37. So they're very close, and that's the full data set. If you remove the first few months, based on saying it's like outlier data, which there's debate on that. But if you were to remove the first couple months and start October 25th, then the power law support would be 35.5 for the fifth quantile and 32.5 for the third quantile. So basically in the mid 30s, you could say, just to summarize, roughly, you could say, depending on how you do it, power law support's kind of in the mid 30s. And if you think about what we got to, we just dropped down to 49,000. I mean, that's not that far from power law support, which is kind of crazy. And not to say, of course, we can go below power law support. By definition, a percentage of the data points go below power law support. But I mean, to give you an idea of power law support, that's, COVID brought us down to power law support. We went a little bit below it. FTX, we basically went down to power law support during that crash. So all the previous kind of black swans and deeply oversold periods, we were near that power law support. So I was kind of thinking are we going to see something similar to the last cycle where during COVID, we dropped down to power law support right before we mooned and went to the full-on bull market. Now I don't know if we will or won't, but it's an interesting idea that we say we get some black swan here over the next few months. Like there's a lot of uncertainty in the world, so I don't think we can rule out black swan. So say we get one, people think like, oh, that's doom and gloom for Bitcoin. Well, it's probably just going to bring us down to power law support, right? We might go down to 30,000. That's kind of like worst case for me is we go drop down to like low 30s, maybe like 29 and an absolute horrific black swan, something like that, right? But yeah, we're very much like this last few months has been very healthy for Bitcoin because since March, we've kind of gone sideways to down. And this has helped to reset all these overheated metrics. So for me, the last few months has been great because like Giovani pointed out, we were ahead of schedule. And this kind of brought us back to be more on schedule. So I'm very much happy with how things played out the last few months. And I just want to remind people that are new to the power law, the longer it takes for us to reach the peak, so to speak, the higher we can go. And one of the reasons why we didn't peak as high maybe last cycle is because of COVID and the influx of liquidity after that, it caused us potentially to have that first peak a bit early. So I would like to see us peak second half of next year, or even a little into 2026. Now I'm not married to. I'm almost. I'll wrap it up here, but I'm not married to. I'm agnostic on the time. I do have a bias towards Q4 of 2025 because that's what the pattern showed since the beginning of Bitcoin. We are on this 4-year pattern, so I would say I'm slightly biased towards second half of next year, specifically Q4. But I'm not married to it, and I'm open to us peaking a bit later or a bit earlier. And depending on if we do, that's going to shift the how high we go. And the very last thing I'll say is, I think Trump getting elected or not is going to be a big factor. Obviously, rate cuts is going to be a big factor. How aggressively they cut and how fast. And then there's different models that this group has kind of come up with that I think are really interesting. Because like for me, the power law support really is the main kind of model, or the main thing I feel confident in. And then from there, there's various ways to model deviation. You can use like volatility adjusted. Sina can speak to that. He created a great model using volatility, adjusting the power law for volatility. There's also the decay channel. There's also time ahead of power law support that SPK did. There's Kager adjusted. There's all these different ones, like percentiles, combining vertical and horizontal deviation. So I'll leave it there. But yeah, I'm really interested in how we model deviation from power law support and kind of what price ranges the group thinks we can get to depending on when we peak.
Yeah, thanks a lot, Plancy. I'm going to pass it. Sminston has not talked yet, and I know he's done some work on the sort of exponential tops, kind of the converging volatility, which I think kind of goes back to your point about the R squared, right? You're getting R squared being higher because volatility is kind of compressing a little bit, right? Those two are kind of hand in hand.
Yeah, it makes sense, right? The more we kind of like hug the line, right? And Giovani showed the like 4-year moving average, how it's like a snake going around a pole, and it gets closer to it. So yeah, the more we kind of hug power law trend line, the higher the R squared is going to get, right? So yeah, exactly what you said.
Sminston, why don't you tell us a little bit about this idea that you have of this exponential decay? And I don't want to say anybody's who found it first or whatever, but you've been posting about this, and I think it's an interesting idea. Although I got to tell you, I disagree with where it's ultimately heading, which is sort of there's no volatility by 2040, which I find hard to believe. But go ahead and tell us your theory, anyways.
Yeah. Thanks for you. First of all, can you all hear me okay? I just want to make sure because my connection's not the best here.
No, you're coming in great. You're coming in good.
Yeah, thanks a bunch for having me here. I've seen the disagreement there. It's not too far off, I got to say, from looking at some of Giovanni's earlier full power law, if you want to call it decay, more of the sinusoidal decay. I think it's in the long-term trend, you'll see something very similar. And so I think a lot of us, when we take a look at the data, we can probably agree that the volatility is decreasing. What's according to some function against the power law. And it looks like you said, when you stretch the graph way out past 2040, especially beyond that, it essentially looks like the volatility goes to zero. And I guess a couple notes there is, one, it doesn't go to 0, 0, right? Because it's converging to the power law, or it's approaching asymptotically the power law there. So there's going to be some, but of course it's approaching 0 against the power law. So there's that, and it looks to me, I agree, it looks to me like somewhere I think in the 2040s, it's nearly indistinguishable from having just the power law support line there. So I think intuitively for me, it makes sense that there is diminishing volatility there. And so I think a couple of us have sort of like expressed, if you look at the different percentiles of the data, there's a similar trend there in terms of that decay. And I think Sina could probably also turn up some of his volatility decay there and show a similar. So I think just to kind of to wrap that first point up there, I think the trend is probably real. And I think that, with kind of empirically looking at the data that we have so far, I've been focusing mostly on the very tippy tops of each of these different cycles. And so far we only have 4 of them. And the way I started looking into it was I was literally curious about where is the exact point, the max point of the residuals for each of these cycles. And let's just see where that takes us as a possible upper bound, because I would love, kind of as a practical engineer sort of thinker, I'm looking for some sort of upper bound to be able to play with, even if it ends up being not totally robust in the long term. So anyway, that's how I found it. I think intuitively the decay makes sense. I think that you have some point there. I think we need to think of more ways to maybe compare the relative volatility in the 2040s, 2050s against things like, fluctuations in the value of the dollar, the actual debasement of the dollar, maybe other different commodities that are in the market and how they're fluctuating, to see what kind of makes realistic sense.
Hey,
I agree going to 0, 0 makes sense. It doesn't quite make sense to me, but
just
so
real quick, do you have an ability to share your screen, or are you on the phone or something?
No, I'm unfortunately I'm actually, I wasn't expecting to have.
Hey Fred, I just sent you the picture of his decay oscillator. Maybe you can share that. I don't know if that might be useful.
Where did you send it to me? Twitter?
I just sent it over X.
Okay, let me
DM.
look.
Yeah, there's a version of the graph too that goes out to 2060, I think, and you really see the plot thin out, the channel thin out.
Graph. Let me.
Yeah, just while you.
Let me
Yeah,
try
go
to
for it.
share that one real quick. I'll plan CX. Here we go. Yep. Okay, and now I gotta turn this guy on somehow. Well, keep on going, guys. I'm having some. Oh, here we go. I found it. Okay, so this is the.
Oh, here's the oscillator. Yeah.
Yeah.
Okay.
So this is the oscillator. This is really interesting, though. I think this is worth spending a little bit of time on. You have sort of an animated version of this one as well, but yeah.
Yeah. So this Plan C was actually saying that maybe this is more useful to just show the still. I think a lot of people, because you can see everything right up front. What this is if you look at the decay channel. So in an earlier post a few weeks ago, I characterized kind of 3 different channels, quote unquote channels that I've seen. There's kind of an open channel. There's ways you could derive that where you just take the sigma, -1 sigma to +2 sigma for all of the data and then just project those out. It's an open channel. So all the lines are parallel going into the future. And then there's a narrowing channel, which I myself, I think I first saw Plan C doing it, but I know APSK has been doing it. You do the quantile regression, right, of the power law across all the different quantiles of the data. That ends up forming straight lines in log space that end up narrowing into the future. So you see the diminishing returns, but you're essentially fitting a power law to all the different percentiles. And then
I think this one graph though is a great sort of snapshot. You know what I mean?
This graph is
where are we right now? Well, we're kind of at 17%, right?
We're getting around 16%. I think we went up a little bit today. So this is just taking the value of that support, the power law support line, as we're calling it. I'm using the 5th percentile to do the regression on that. And then the exponential decay fit of those 4 cycle tops as essentially like the upper bound for that channel. And then this is normalizing all of the data in between within that channel from 0 to 100. So 0 to 100% normalization. And so for me, this is useful because it gives you a sense of like, how far off the support we are in terms, and I almost think of like, I work in energy storage, so it's like how charged is the battery here, or how much more energy is there left to discharge here, and I think of that upper bound as, okay, empirically just look. I know it's 4 data points, but kind of it's an incredible fit actually. I did some more analysis, and you can see in some of my posts that 100% line is essentially the upper bound. So it's kind of where we might expect the top to be when we really start to heat up, whether we get, it takes another liquidity injection, or, Giovani's really good at explaining the causation there. But once we really start kind of going into quote unquote full bull or true bull, it's kind of like, where could we end up reaching a max point in terms of the residuals? So that's what this oscillator is telling us.
Hey guys, just really quickly on the oscillator, like look at the last 2 cycles, how both times, so 2013, there was that first peak in 2013. We actually got to a similar level roughly, and then we've come down. And then look at the 2019, how we came out of the bottom. We didn't quite get as high, but we came all the way back to support. So this reset, I mean, this got us from like 42 or something all the way back to I think you said 18. So this is a very healthy reset of this oscillator.
And I want to make a comment that, there are, because I heard it today, people say, oh, the power law, it maybe could be interesting, tell us something, but it's not useful because it doesn't tell us anything about, the timing and where to buy, when to sell. Look at this graph. This is incredible, right? I mean, it has to be taken with a caveat that is, if this exponential decay continues, that it's amazing that it's so regular, even that, because it's crazy, right? It's FOMO. It's supposed to be FOMO. How is possible that these FOMO tops, they should be so completely unpredictable, they also follow a very precise path, right? Now it's 4 points. We will see if the other ones continue. But
I totally agree. I totally agree with that.
It's completely crazy. But a graph like this, I mean, it's the best. You don't need anything else. You know everything you need to know, right? You need to when to buy, when to sell, when the bull market starts, everything. I mean, anybody that says, "Oh, the power law is not useful because it has a too wide range of possible value," they don't understand it. They think that it's like a blob, where you have this wide range. That is wide because we have these huge big bubbles, but they think that basically the power law says it could be random dots all over the place. No, it tells you that relatives, if you take the power law and in fact the support, that is a very good idea, probably is the real power law. The support is where the power law really is, and it has something to do with miners and the cost of producing Bitcoin. So if you take everything relatively to that support, it seems a very solid, almost physical type of property of Bitcoin, then the Bitcoin becomes like a clear map of a territory. You have these very precise oscillations. They happen at a very precise time. They are in a very precise range when normalized. You have all the information that you need. I mean, I don't know of any other type of indicator, TA, no TA, on-chain information.
I've looked at over 50 oscillators. I've looked at on-chain. I've looked at all the oscillators. They all downtrend. They all have this decay pretty much across the board. There's some exceptions. Yeah. I mean, there's like the pi cycle top, that crosses near the peaks. It historically has. There's some TA stuff where you don't have it. It's decent. But I mean, the power law, there's different lenses, right? You even have like Sina has his volatility adjusted version of this. And it's similar. It doesn't have a decay at the tops. No. And like I said, like Giovani's saying, the power law, we have that solid support line. And then there's different ways to model, the deviation from that. But you can create oscillators that don't have the decay, and that makes them the most useful. Plus, the foundation is the power law, which is the best model I've seen by far. So I agree completely with what he's saying.
So, listen, I definitely want to. I just want to also just echo Plan C and just thank Giovani for his contribution to the field of the power law in Bitcoin. I think a lot of us, and I want to also add a point that Thomas Young brings up here. There's the power law, which is the simplest possible pure form of the power law, which is just the trend line, right? Then there's other things that are being now envisioned on top of the power law, bubble models. And Thomas Young has a question. is the 4-year cyclicality part of the power law, or is it driven from something else?
Yeah,
And
so I studied these a lot. There are two ways of thinking about this. One is the bubbles don't even exist. That is one possible answer. Why? Because you can see here, right? They reach a top. In fact, I have this graph, I can show it, but basically show the support line, right? And maybe I can share it with you. It shows the support line. You see that support line, then you see the deviations that are the bubbles. And after 2 years, because the bubble, this is what they last, they usually last 2 years, 1 year up, 1 year down, the price goes back to the power law support, almost like the bubble didn't exist. So in a sense, if you are not interested in doing some kind of selling at the top, even partially, that I think is a good idea, by the way, do it moderately, 10%, 15%, 20%. It's for people that don't have thousands of Bitcoin, is a possible way of leveraging this knowledge to actually multiply your Bitcoin. Do it in a very non-degen way, because it's stupid to use Bitcoin in a degen way. But if you don't want to do that and you want just to hold it, it's like the bubbles didn't exist, in a sense. The other way is, are they an integral part? So, for example, at a certain point, I did a study. You can find it in it's called bitposeidon.com. It's basically my website. You can sign up for the newsletter. I'm trying to create articles on a regular basis. But I wrote an article where basically I was able to derive the power law as network properties. Basically, I model the addresses, like if it were nodes in a network, and the price proportional to the connections in the network. Because according to Metcalfe theory, the price of a network is proportional to the connections. When I did that, I got the power laws. I got the power law that we observe for addresses without implying that there was a power law. It was the solution of the differential equations that describe the evolution of a network. And I also got the power law for the price. But at a certain point, I took one of the parameters, because everything is parameterized in these equations. And one of the parameters that describe how strong the connections are in the network, I made it a function of time instead of being a constant. And what did I get? I got the bubbles. So one possible interpretation is that during the bubbles, the connection of the networks changed. They became stronger, they became more active, and then this is what the bubbles are. So in a sense, they are part of the evolution of Bitcoin. They are not two different processes, but it's simply that there are these cyclic behavior. Now, one thing that people are asking all the time, or they're interested, is because almost all what we do with Bitcoin, right, in our approach is internal. We don't almost care about what happens outside. We look at the internal consistency of Bitcoin behavior. But we also can bring some external information. So if you want, and then Smithson wants to show this diagram. So if you give me just a second, then I will let you talk as much as you want. But let me show this interesting graph because it's really cool. I did a model of a global liquidity. So basically this model, so people are asking this question all the time. Is there a relationship between global liquidity and the price of Bitcoin? Yes, there is. So if Fred, you can share my graph, if you don't mind. It's on the right, on the left there.
Different one, Fred. We can come back to this when Gio's done with his.
Yeah, so it's this graph here that you see. So what did I do here? I found that, and again, if you go in it's called bitposeidon.com. It's my website. My newsletter had an article about this thing. And I discovered that there is a very precise relationship. I took M2 from different countries, Japan, China, US, all the major banks, and anything that you can imagine that describe global liquidity. And then I found, there is this very complicated relationship. It's not a power law, but there is a very strong relationship between price of Bitcoin and global liquidity. But it's such a complicated model that you will have to use some kind of polynomial model that is, you can, make it overfit if you are not careful. But it's still a good approach in the sense that you can calculate what is the estimated price given the global liquidity at the moment. And that is the purple line. So I can show you that something interesting, there is a very interesting pattern that happens. So basically right now it's saying, it's very close to the support, right? It's saying right now, if we had to use the liquidity that is available right now, the estimated price, the real fair value price will be around 39,000. So that is another way of confirming what we were saying, that we are overvalued due to FOMO probably, or due to the ETFs, etc. So this is what the purple line says. Now I color coded the regions where the price itself is above the purple line, right? The red line is our usual power law. And if it is above, I color code it red. So that means the price doesn't have enough liquidity to support it. Now, is the liquidity what drives the bubbles? Not really, but it is a prerequisite in the sense, you see here, look what happened. Before the bubble, we needed to have a green area. We needed to have a purple line being above a white line, almost like a prerequisite for the bubble to happen. And you notice what happened. The real top of the bubble is uncoupled from the global liquidity. It does its own thing. And in fact, this decoupling is almost like an alert system that we are reaching places where the bubble is unsustainable, right? Because we don't have enough liquidity. It's all FOMO driven. And you can see this pattern has been consistent over and over again, that we do need to see this green area to appear before the bull market starts. So it's pretty cool. And you can compare with where we are right now, that is now that. And if anything, actually this correction, right? Notice what happened. The global liquidity is going up. The correction brought the price closer. And hopefully somewhere here, these two are going to meet and we are going to switch to green. And then after some time that we have this green area, that should be another confirming sign that we are ready for the bull market. So I don't know, it's an interesting analysis.
Yeah, if you could add a link to that in the comments,
Sure.
so if other people can kind of do a deeper dive. We don't have that much more time. I want to kind of wrap it up, but I do want to show a little bit this decaying channel thing, and maybe Spencer can just spend a few minutes on that, and then we can also get to the APSK 32 graph real quick. So this one first. Let's take a look at this. Maybe
sure.
Go over that.
Yeah, first of all, I dropped that in the wrong chat, so I apologize. I'm working with what I got here. Yeah, so this is showing, I believe this is out to 2041. So the oscillator is based on this, right? So there's a lot of different. If you have a top model, let's say where you have a upper bound and a lower bound, you essentially can turn it into an oscillator. So the oscillator, the bottom of it, which is just a flat line, as you saw in the oscillator, is the power law support. That's the straight line that you can't unsee. That we've been the power law folks here, they call them the line that you can't unsee. And quick aside, I also want to give a shout out to Giovani, because I don't know if I would have stumbled across it if I hadn't seen his content. So thank you again for that, Giovani, for bringing me into the fold. And then, of course, the upper bound there it's not an actual exponential decay in time. It is with respect to the power law. So the very first time I tried to do this, I actually made a mistake in my code. I forgot to add a +1 to asymptotically converge it to the support line. So this is the correct way to do it. And as you see, as you go further out in time, the gap gets smaller and smaller and smaller. So this is what I call the decay channel. And so that's what the oscillator kind of lives within. And the reason I like it is that I think it gives us a realistic sense of what we can expect for the tops when we really start to get heated up. In the last 4 cycles, it's been amazingly precise. I think that's one big takeaway. The R squared here is 99.8%, 0.998. If you use the 5th quantile, which is what my version now that I'm using, it's like 0.9985. Yes, big caveat, as Gio pointed out, is that it's 4 data points, but we only have 4 cycles, so it's really just a very empirical look.
And what about the p-value? The p-value and
the p-value in all of those cases is like it's like 0.0007, 0.0008. And I don't know if we want to go into the explanation of the p-value, but it basically means it's statistically significant. I think a few of you other guys have kind of confirmed that as well, taking a look at it. So basically that means it's very, very low probability that it's by chance, by random chance, is what the p-value tells you, right? And then the last point on there, and you can see in one of my posts from a couple weeks ago, Fred, is that I wanted to look at the first three peaks, the first three cycles, so 2011, 2013, 2017, forget about the 2021 peak, and fit the exponential to those residuals, right, to those deviations, and see what we would have come up with for that same date in the fourth cycle as a pretty neat exercise. And it turns out that it's like within 2% error, it would have predicted that same value for the 2021 peak, which I thought was.
I think those are great tests, right? I mean, that's kind of like that's what sold me on Giovani's analysis first, is that somebody else had filled in the blanks after he stopped his analysis. Like,
same with me. Not enough people see this of Giovani's work, that he actually has like a decent amount of out of sample data. It's really important. I think it's like 6 years, isn't it, Giovani? And so that's crucial, I think, in the it's more than just, kind of back testing. So I thought that was again way more data for the support line. I'm with these guys. I think the support power law fundamentally is probably definitely what I trust most about all of this modeling. What I'm looking for here is what I'm interested in here is grab my attention is a very interesting high precision, high accuracy fit of both the daily and the hourly data for the cycle tops. So
I want to just wrap it up on. I just want to wrap it up on this APSK 32 graph, and then I want to do this again, maybe in a week or two. We'll probably move up or down. Who knows? But I think this is a good general thing. We'll all kind of sit around and we'll kind of come in every couple of weeks and we'll see kind of where we are with the state of the power law. But so APSK, why don't you go over this?
Yeah, so I think this brings together kind of the three elements. We got an animation here, but along the bottom, we've got the power law support, kind of the strongest element here. Along the top, we've got this exponential decay. So that kind of really ties in to what we've been talking about. So if you take Bitcoin's price, you find the power law support. Okay. This is now price divided by support, right? And so this is where that exponential decay shows up. And this is what we've just been talking about with the oscillator. So you plot that exponential decay, right? And this is your channel. If you normalize it, make it flat. Or if you bring it up back to price, then you get this upper bound on price, which is kind of interesting. Now, if you add on top of the power law and the exponential decay, the idea of the cycles, right? And you could debate, should we do 4-year periods or should we do it by halving? Here, I'm going to do it by halving. And so I'm going to grab the first cycle. So I just grabbed the price line of the first cycle and I moved it to the right, but it's normalized by the upper and lower bound. And I'll do that for the other two. And then we kind of zoom in to today, right? So earlier we were talking about us being overpriced for where we were in previous cycles. That's shown here. This red line is the current Bitcoin price. And these blue lines are the different cycles overlaid on top within those bounds, the exponential decay oscillator. And then this just kind of fills in and does a mean. And so that's how you get to this, cloud here. So based on the last 3 cycles, anything kind of in this light blue line here would be about the shape of what we've seen in previous halvings.
Okay, I'm going to end it there, guys, but I just want to thank everybody, Sina, Sminston, Giovani, APSK, and Plan C. And I think we should do this again. I think obviously a lot of people showed up, pretty much impromptu because I just came up with the idea today, but it's good to get a bunch of brainiacs in one room. And I'm sure we're going to get tons of questions and stuff. So everybody, all the people, just put your addresses and stuff in the comments and everybody will find you. And we'll do this again, guys. So thanks a lot. Talk to you guys later.
Thanks for